Good morning and good afternoon, and welcome to the March 20 DTN WASDE webinar. My name is Andy Miller with DTN, and I'll be your moderator today. And with me, as always, is Todd Hultman, our lead market analyst for DTN. A couple housekeeping items during this event. All participants in only mode. You may ask questions at any time during the event, and to do so, click on the question mark button located in the floating toolbar in the bottom right of your screen. This will open the Q&A panel, and then type your question in that box. We do encourage you to ask questions at any time during the presentation. Your questions will not be viewable by other attendees and will be addressed during the Q&A session. Also, this event is being recorded and rebroadcast on dtn.com within 48 hours. So I think we're ready to go. Todd, I'll turn it over to you.
Thank you, Andy. Hello, everybody. Welcome to our webinar for the March WASDE report. As I've entitled this here, will anyone notice? Will the market notice today? There's so many events going on that have really rattled markets lately. And as you probably well know, we're trading at extraordinary heights in corn, soybeans, and wheat prices, largely related to the Ukraine war and the events going on in Ukraine. But we'll talk a lot about that. We'll see what USDA says about that today. So let's go ahead and dive in and get started on the March WASDE report. First of all, before we get into the report, we do see a note from USDA saying that Russia's recent military action in Ukraine significantly increased the uncertainty of the ag supply and demand conditions. So a bit of an obvious note there, but obviously USDA recognizing that this is a highly fluid situation, that we have extremely high prices with a lot of fear and anxiety in markets, and there's a lot we don't know, obviously, about what conditions are going to be like as we move forward. So USDA just simply acknowledging the unusual and very volatile situation that we have here in our markets. Okay, let's go ahead now and take a look at USDA's numbers for the day, starting with corn. This is the U.S. balance sheet, and if you look at the red rectangle on the lower right corner, you'll see a new ending stocks estimate for U.S. corn of 1.44 billion bushels. That's down 100 million bushels from last month, and it comes largely from two changes. In the ethanol category, we see a 25 million bushel increase in the ethanol production estimate. That was something that was expected, that I talked about in the preview. Ethanol production so far this year running up 11% from a year ago, so there is room for that. Also in the export category, that was the other change today. We see a 75 million bushel increase in the expectation for U.S. corn exports, and I would say that is directly tied to the Ukraine situation and the fact that not only is Ukraine going to have a difficult time exporting the corn they have, today they actually enacted a ban to protect and keep a lot of their ag products in country. I don't know if corn was on the list. I do know wheat was on the list today, but obviously they're taking protective measures to try to keep some food supply in the country. So for lots of reasons, it's going to be much more difficult to export through the Black Sea this year, or early this year at least. And also another thing I want to mention about the Ukrainian situation today, keep in mind that our WASDE report is focused on the current 2021 to 2022 season. So this USDA is making no estimates yet about the corn crop that we're going to plant this spring, or the corn or the wheat crops, the corn crop that USDA or Ukraine will plant this spring also. And of course, Ukraine also has a big winter wheat crop in the ground, which will be emerging from dormancy in the next month or two. And so there's a lot of questions about what Ukraine's production is going to look like in 2022, but that's really beyond the scope of today's report. So just wanted to clarify that as we look at today's numbers. Here's the world estimates, supply and demand for world corn, and we see in the upper right corner the ending stocks estimate for world corn has been reduced from 302 down to roughly 301 million metric tons. That was obviously a reduction, but still slightly higher than was expected from Dow Jones pre-report survey. There's a couple changes here I want to note. First of all, working from left to right, let's look in the second column and see the crop estimates for South America. There for corn, we see Argentina's corn estimate reduced from 54 to 53 million metric tons. That was close to expectations. The survey also thought that Brazil's crop would be reduced today, but USDA left the corn crop estimate unchanged for Brazil at 114 million metric tons. Keep in mind Brazil's second corn crop, which is their larger corn crop, is just in the process of being planted now. They've had some beneficial rains this past week, but those rains are expected to run out here in the next day or two, with the drier forecast coming back again for southern Brazil. On the working now to the right, on the export column, which is the second column from the right, that's where we see the U.S. export estimate increased roughly 2 million metric tons. But now look to the lower part of the balance sheet, and we see Ukraine's corn export estimate reduced 6 million tons from 33.5 down to 27.5 million metric tons. So USDA making an allowance for the extreme difficulty in Ukraine exporting corn right now and cutting that estimate by 6 million tons, basically tossing 2 of that to the U.S. is how the USDA sees that playing out at the current time. What does the new U.S. ending stocks estimate mean in terms of the supply and demand fundamentals for corn? Well, even though the ending stocks came down 100 million bushels, it really was not enough to change the ending stocks to use ratio. So we're still very close to 10% on that. We're still targeting a fundamental corn price of $5.10 a bushel. Now, again, this is strictly going by a historical check on where corn prices typically trade when supplies are at this level. It does not take into account South American drought, and it does not take into account the war in Ukraine. So obviously the market trading cash corn prices right now above $7 is much higher than this strict fundamental target would suggest. And for that reason, a lot of USDA's numbers are not going to correlate very well to the actual prices in the market right now. There's just, again, a lot of anxiety and uncertainty, the Ukraine situation most recently adding a lot to that. So if we were in normal times, without all this anxiety, we'd be looking for a cash corn price of roughly $5.10, but of course that does not reflect today's market. How about the corn exports? So far, corn shipments are doing quite well. They're only down 2% from last year's record pace. They're also well above the 4-year average, which is the black line on this graphic. Total sales and commitments, however, are still down 19% from a year ago. So overall, the sales pace is lagging, even though the shipment pace is pretty close to a year ago at this time. So overall, USDA is estimating a 12% decline in corn exports, but one thing I realized, I did not update that for today's 75 million bushel increase. So USDA will be actually estimating a smaller decline than the 12% I have on here. My apology. As we look at corn prices in China, and always looking at this as a clue to what's happening in China, we can see that corn prices there are challenging their highs of last year, just as ours are here in the U.S. May corn on the Dalian exchange as of this morning translates to $11.54 a bushel. That suggests that China will probably still be an active buyer of more corn here in the next several months. And obviously, before the war, they were sourcing corn from Ukraine, but now with the Ukraine situation in such dire straits, there is a good possibility that we in the U.S. may get some of that corn business from China. the basis. This is a new topic and something that we have not seen maybe ever that I can recall, but certainly not for a long, long time if it has happened before. What we have here, we have a futures market, both in corn and wheat, and to a lesser degree in soybeans, that has been injected with such bullishness, and the short side of the market has become so scared in this extreme situation that the futures board has gotten so high, it's really gone higher than the commercials are comfortable bidding prices. And so instead of continuing to hitch their wagon to the futures board as they normally would by pricing corn according to a certain basis off the May contract, a lot of commercials have shifted their bids to be priced off of the July contract, which is a lower price than the current May contract. So it's kind of messed up what is a traditional cash futures relationship here by going to the July contract so early, but it's really commercials taking responsibility for their own pricing decisions and letting go of the May contract in the futures market for now, because obviously the May futures is not reflecting the actual supply and demand situation that the commercials are seeing in the country. So I hope I tried to make sense out of that for you. The practical result here is that even though they're going to be pricing off the July contract, DTN's national index of cash corn prices was at $7.14 last night. That's the national average for the country. That's still up 93 cents from a month ago. So this is a very strong cash market. Have no doubt about that. If we look at the cash basis versus the July contract, where a lot of commercials have shifted to, that cash price is 12% or 12 cents below the July contract. So that still is a fairly strong representation of the cash market. If we compare that cash price to the May contract, we're 39 cents below the May contract. In normal times, if it dropped to 39 cents below, we would say it looks like a weakening basis, like there's something wrong with demand. But that's not really the case in this situation. It's just that the futures market has gotten so over-exaggerated to the upside in the May contract. That's where the cash and the futures market are separating. In my mind, I think the commercials are making a responsible decision to take their pricing into their own hands and let go of that May contract for now, given the extreme nature of this situation. So I hope that's not too confusing, but the bottom line is cash prices across the country still quite high, $7.14 on average across the country, and that's the main thing to keep in mind here. Ethanol prices, we saw quite a sell-off of ethanol prices from Thanksgiving down to early February, but ever since early February and now with the war in Ukraine, and we've had a meteoric rise in energy prices, ethanol has also gone along and has started to climb out of its hole the past month. So as I mentioned, ethanol production is still up 11% this season from a year ago. That's a very strong pace and accounted for the 25 million bushel increase in the ethanol demand today. And we're seeing the ethanol prices firm. Even though ethanol inventories right now are at their highest level in 22 months, the firming of the ethanol price does suggest that demand is picking up. The future spread, as you can see here, it's had a bit of a bullish explosion with news of the war. And by the way, February 23rd or 24th is kind of the day that marks the Russian invasion of Ukraine. So this spread goes along with that very well. And this is the May-July spread. And as you can see here, the May corn contract is holding a big premium above the price of July. That's a very strong indication of commercial demand, but it's also a strong indication of a buying panic and a a lot of short covering in corn. Speculators are still quite heavily long in corn. Of course, they're making out like bandits after Russia invaded Ukraine and the corn prices have shot higher the last month. Right now, non-commercial net longs are over 460,000. One of some of the biggest positions they've had since early last year. And as long as the trend is up, as long as the market is going their way, they are not a bearish concern to the market. But if something were to happen that would turn this market around and the market would start breaking some old lows or support levels, that's when this speculative position would become a concern as far as a source of selling to the market. But the way things are going right now, the bulls obviously are in charge. They're doing quite well, and they're not a bearish risk the way things are today. Just to give us a little bit of perspective before I go into the soybean markets, I just wanted to show some of the facts about Ukraine. And on the left column, we have last year's production from Ukraine. So corn, they produced 1.65 billion bushels. That amounted to 16% of the world's exports. They're the world's fourth largest exporter of corn. And so that's just to show a bit of their significance here to the world market. In wheat, they had 1.2 billion bushels of production. That they accounted for 12% of the world's exports. They're also the fourth largest exporter of wheat in the world. Sunflower oil, they produce 16.1 billion pounds. I believe the U.S. produces about 26 billion pounds of soybean oil, so that's somewhat how that compares. In the sunflower oil market, they account for half of the exports, but if we take that as a percentage of all vegetable oil exports, their contribution of sunflower oil accounts for 8% of world vegetable oil exports. So they're still a very significant component in the world vegetable oil supply. And of course, we've seen a big rise in vegetable oil prices recently, also related to concerns about Ukraine. And then lastly, barley production, almost 470 million bushels. Last year, they account for 18% of the world's barley exports. They're number 3 on that list in terms of the world total. So obviously, this is a very important food-producing, grain-producing region of the world that's under attack. And it's very difficult to say how it's going to go. And, it's very difficult to say what winter wheat harvest is going to look like this spring, or if they're going to be able to get their crops planted. So it's a lot of uncertainty here with a huge significance for world crop supplies in general. Okay. With that having been said, let's look at soybeans here today, and we look in the lower right corner and see that the new ending stocks estimate for U.S. soybeans is 285 million bushels. That's down 40 million bushels from last month. It's not quite as low as the 270 million bushels that analysts were expecting, but obviously it is a bit of a drop. And it comes from one item only, and that is a 40 million bushel increase in the export estimate for soybeans. And as we'll see, that's going to be related to lower crop production totals for South America. So we'll see that here in just a minute. I thought there might have been room for another increase in the crush demand total, but USDA chose to keep that unchanged this month at 2.215 billion bushels. As we look at the world estimates for soybeans, in the upper right corner, we see that USDA's estimate of world soybean stocks was reduced from 92.8 million metric tons down to roughly 90 million metric tons. Again, that was in the right direction as far as analysts were concerned, but wasn't quite as big a drop as analysts were expecting. Still, it's a modest improvement in the balance sheet overall. Now, I always mention that USDA's estimate of soybean stocks in this table is a combination of ending stocks in the northern hemisphere and its mid-season stocks in the southern hemisphere. So I had to go to another report to see USDA's ending stocks estimates for the local supplies of Brazil and Argentina. And in that report, USDA estimates that Brazil is going to have ending stocks of just 66 million bushels in the current season, which ends January 31st of 2023. That's the local marketing season that Brazil is in. For Argentina, that local ending stocks estimate, according to their season, is going to be 202 million bushels. So those are two very tight numbers overall, traditionally, for both Brazil and Argentina. If you see the big long red rectangle here, I've highlighted USDA's changes for Argentina, Brazil, and Paraguay. And working from left to right, let's go to the second column and look at the crop estimates for those three. And we see that Argentina's soybean crop was reduced from 45 to 43.5 million metric ton. Brazil's crop was reduced 7 million metric tons down to 127 million metric tons. That's closer to what we've been seeing from private estimates, but there's still room to go lower if private estimates are correct. On tomorrow, Brazil's crop agency, CONAB, is expected to have their crop estimate. It was last seen at 125.5, so it'll be interesting to see what CONAB says about their own soybean crop here on Thursday. And then lastly, USDA reduced its soybean crop estimate for Paraguay by 1 million metric tons down to 5.3 million metric tons. So overall, we see, I believe it's a 9.5 million metric ton reduction in USDA's crop estimates for those three countries. If we go to the far right end of the red rectangle, the second column from the right, we see reductions made in the export estimates of those three countries, and we see a 1 million metric ton reduction for Argentina, a 5 million metric ton reduction for Brazil, and a reduction of roughly 500,000 metric tons for Paraguay, for a total of 6.5 million metric ton reduction for the three countries. So USDA, I believe, catching up basically to what the market's been telling us about the South American situation for quite some time now. So USDA getting a little closer in line with what we've been hearing elsewhere. What should, if there wasn't all the anxiety in the markets that we're seeing today from drought and from the fighting in Ukraine, what cash soybean prices would we normally expect with the new ending stocks estimate of 280 million bushels? Well, that works out to 6% ending stocks to use ratio, and it would give us a cash target of $12.50. So you can see the market for our DTN National Soybean Index is currently trading above $16 a bushel. We're a long way from what a strict supply and demand estimate target would give us based on USDA's fundamental assessment here. So a lot of uncertainty in the picture, and you can see just how much that nervousness and that fear premium is in this market. How about soybean exports? Well, from the latest data we have, which is as of February 24th, soybean shipments are actually doing fairly well, signified by the red line on this chart. The green shaded area is last year's record production level, and the black line is the 4-year average. So we're down, shipments are down roughly 22% from a year ago at this time, but we are well above the 4-year average yet. If we take all the sales and shipments of soybeans so far, we're still, we're still down about 16% from a year ago. So it's kind of in between the 4-year average and last year's record pace. We're we're well off the record pace, but still showing progress. And of course, we've picked up more export sales, and export sales continue to be active, especially after seeing so much drought damage in Brazil in particular, but also in Argentina. And this chart helps to explain just how bullish the situation has become. Here we have a green line and a brown line. The brown line is the FOB soybean price out of Paranagua, Brazil, and it's for March delivery. The green line is the same price out of the U.S. Gulf for March delivery. And of course, as the first thing we notice is that both lines have gone up sharply since December. So soybean prices have gone up sharply. Early on in December and January, Brazil's soybeans were the cheaper of the two prices, and that's what we normally see when Brazil is going to have a good crop and is anticipating harvest. Their prices get cheaper, and of course that means that it's usually their turn to export a lot more than we do. But with the drought damage that hit, that relationship kind of left its traditional tack. And somewhere here in about mid to late February, we saw a shift where U.S. prices of soybeans are actually cheaper of the two now, and that's really separated more here just in the last week. So the very high price, the brown line, showing a very high price for FOB soybeans in Brazil is starting to show us just how tight the supplies are there. And for this to be happening in March is really quite unusual. And it's a highly bullish clue that Brazil's soybean supplies probably aren't going to last very long, certainly not as long as they normally do. And it probably won't be long before China starts coming to the U.S. for not only new crop supplies, but in this case for old crop supplies. And that's something we did not expect. So right now, USDA is expecting 285 million bushels of ending stocks, but that could actually tighten down even more quite quickly if we see China start buying old crop soybeans from the U.S. So that's the next thing to kind of watch for. It's a very bullish situation here for Brazil to come up so short on their harvest. In China itself, we take a look at the soybean and soybean meal prices in China, and we can see that in early 2022, both meal and soybean prices have jumped very strong to new highs. Now, if we look at the soybean chart where I have the red circling it, it looks like there was a reversal on the chart, but actually that was just a shift from going from a very high-priced March contract, and then the March contract became less active, and so the chart shifted to the May contract, which was at a lower price. But if we looked at the May price itself, it's continuing to maintain a steady uptrend. So that what looks like a reversal is a little bit deceptive there. This is still a market with a very strong demand for soybeans, and those soybean prices keep rising. As of this morning, May soybeans on the Dalian exchange were at the equivalent of $22.35 a bushel. Both soybeans and meal prices are near their highest levels in China in 9 years. So this is a very strong looking demand situation. And as I mentioned, with U.S. soybeans becoming cheaper than Brazil soybeans already, it seems like it won't be long before they start turning to us for old crop business as well as new crop business. So we have a very bullish situation here because of all this. Cash soybean prices really have a similar type of thing going on as I explained in corn. It's been a little bit less dramatic. There's still a lot of May offers around the country, but let me just focus on DTN's National Soybean Index and let you know that last night the cash average around the country was $16.17. That's up 96 cents from when we talked about this a month ago. So very strong price increases we're seeing in the cash market, and that's really the most important thing to keep in mind. It has the same situation as corn in the sense that that cash price is 73 cents below the May contract, which looks like a weakening basis. But if we look at the July contract, it's only 39 cents below the July. So depending on the month you want to compare it to, the basis is either strong or firm, but I would suggest that those cash prices are quite strong. The soybean future spread, here's the May-July spread on soybeans, and as you can see, it's just been straight up really since late January and then late February when the war took off. It's been straight up. And so to have this big premium in May soybeans above July, again, a very strong sign not only of commercial demand, but also a bit of panic and short covering in the market. This is something that's been just consistently bullish for soybeans since December, and that is looking at the crush value. That is the total value that bean oil and soybean meal represent from crushing a bushel of soybeans. And so the blue line on this chart is the value of that meal and oil from crushing a bushel of soybeans. And as you can see on here, it's $20 from a bushel. And these are all based on the May futures contracts, by the way. The May soybean price last night going for $16.90 puts the crush premium, that is the crush value, above the cost of the soybean at $3.11 a bushel. This is among the largest returns we've ever seen on record for crushers. So there continues to be extremely strong crush demand, and the bottom line is we've got strong demand for both bean oil and soybean meal in this market, and it's so strong that it's keeping ahead of pace as far as the rising price of soybeans go. So, typically if soybeans were in a strong bull market, at some point you'd see those soybeans outpace the crush value and that demand would slow down or choke off, but we're not seeing any sign of that yet. Domestic demand for soybeans continues to be very strong. Speculative positions in soybeans are not as big comparatively speaking as corn, but they are growing, and especially with the uptrend in prices this year, typically speculators respond to trends or markets that are moving, and of course we have that here in spades in soybeans. The non-commercial net longs are now over 218,000 contracts in this market, but they're in the current market situation, there's really no risk to the market whatsoever. And again, same as I mentioned in corn, until this market starts turning lower or showing signs of breaking old support levels, those non-commercials are not a problem as of yet. Okay, turning now to wheat, and this is where it's been in the wheat markets and the wheat prices that have really had the biggest response, I think we could say, to the Ukraine situation, and for good reason. The Black Sea is known as a big producer and an important producer of wheat in the world. So we'll start with USDA's balance sheet here, looking at the new ending stocks estimate in the lower right corner. 653 million bushels. That's up 5 million bushels from where it was a month ago. The analysts and Dow Jones survey were actually looking for 633 million bushels. They were looking for a decline, but that's not what happened. We saw two changes in USDA's estimates for wheat today. The import estimate of U.S. wheat was reduced by 5 million bushels, but the export estimate for wheat was also reduced by 10 million bushels. So the net effect of that was to increase ending stocks by 5 million bushels. It's a small and probably inconsequential change, but it also shows what we've been seeing, and that is that the U.S. is not really benefiting much and probably won't benefit much from any disruption of supplies out of Ukraine. Europe is the one that really stands to benefit from any loss of business there. as we look at the breakdown of the wheat estimates by class, I just highlighted the top 3 wheats here that we see in the U.S. And basically, we see small increases in ending stocks estimates for hard red winter wheat. There's a 5 million bushel increase. And for soft red winter wheat, there's a 5 million bushel increase. And both of those are sharing the 10 million bushel reduction in the export estimate. So they both had their export estimates reduced by 5 million bushels each. The hard red spring wheat ending stocks total was reduced by 5 million bushels to 124 million bushels, and still remains a tight market. The 2 crops, obviously, that are most threatened by drought in the year ahead are the hard red winter wheat in the southwestern plains and the hard red spring wheat in the north and northwestern plains. So, but we have still a possibility of time for that to change, but things are not looking so good for the southwestern plains at the moment, with drought very strong in the region. Here's the world supply and demand table for wheat from USDA, and if you look in the upper right corner, we see an increase in the ending stocks estimate from 278.2 million metric tons up to 281.5. That was a little higher than was expected in Dow Jones survey. The bulk of that increase coming from the crop estimate for Australia, and that's the upper rectangle that you see on the left side of the table. That crop estimate for Australia being increased from 34 to 36.3 million metric tons. So that accounted for most of the increase today in the ending stocks estimate. Before we leave, I do want to note Russia's changes or USDA's changes on the export estimates for Russia and Ukraine. So if we look at the rectangle at the bottom of the page and go to the far right in the second to the right column, we see that Russia's export estimate is reduced 3 million metric tons down to 32 million metric tons, and Ukraine's export estimate is reduced 4 million tons down to 20 million metric tons. Now that was obviously decided before Ukraine's government announced earlier today that they're going to be banning the exports of wheat from the country. So there may be further restriction on that export estimate from USDA next month, but right now there's basically a total of 7 million metric tons of exports taken off the world market from this conflict that we're currently seeing. That's USDA's early estimate anyway. World wheat stocks remain tight. Now, this was a little bit ironic, but the estimate of ending wheat stocks at the top 8 exporters actually increased this month, and basically it increased because when they cut the export estimates from Ukraine and Russia, they also increased the ending stocks estimate. So this is grain that's not going to move out of the country and is going to stay in the country as USDA sees it. And so that's why the total ending stocks estimate for the top 8 exporters increased from 1.88 billion bushels last month. Now it's just above 2 billion bushels, but it's still the lowest total in 8 years. So overall, we still have a leaner supply situation in wheat this year. And of course, now with all this anxiety on top of it, that's really added to the price bullishness. The history of cash HRW wheat prices. Once again, here's a chart that's not so relevant in today's market, but if all the outside events were not going on and we were just looking solely at USDA's supply estimates for hard red winter wheat, we would come up with a cash target of $5.80 a bushel. But obviously, our DTN National HRW Wheat Index closed at $11.17 last night, over $5 above where this strict fundamental target is. And actually, for this supply situation, that puts it at the highest price on record So obviously, the Russian attack of Ukraine has made a big difference to this market, added a lot of anxiety, and really ballooned up prices far more than normal. The basis situation in HRW wheat is somewhat similar to what I described in corn and soybeans, but it's even more dramatic. It's more exaggerated than what I described. So the HRW wheat index last night, $11.07. Did I get that right? Yeah, $11.07 last night. Actually, I think I misspoke earlier. The cash wheat index for HRW is up over $3 from where it was a month ago. But if we look at the basis, it's 92 cents below the May contract. So you see that sharp drop in the green line, which is this year's basis, and it drops even below the old 5-year low for the basis. So it looks like a very weak cash situation. But again, it's not a weak cash situation, especially when you're trading at $11.07 for HRW wheat. It's just the futures market has gotten so out of touch with the more realistic market that commercials deal with and what they see, that a lot of commercials have gone not only jumped out to the July contract, but a lot of commercials in wheat are also going out to the September contract now as a way of offering prices that are more in line with the supply and demand levels that they're seeing. So in wheat, we have the largest distortion and the biggest disconnect between cash and futures at the moment. Here's the May Kansas City wheat chart. It's a weekly chart that shows the non-commercial positions. As you can see, we've had a big price explosion ever since Russian troops invaded Ukraine. There's 41,000 non-commercial net longs in this market. Obviously, they're doing very well, making money from the war on this situation. But keep in mind that at the same time, there's also shorts in this market that are in extreme pain. And just recently, we've had 5 limit up days in a row where it's difficult for the shorts to get out. So there's a lot of financial pain on that side of the market. The biggest short squeeze we saw was in Chicago wheat. And here's where I've broken up and shown that overall, if we looked at the totals, it looks like the net longs in Chicago wheat are slightly higher in this market. But of course, that doesn't mean that everybody's net long. The amount of speculators short in this market, just as of last Friday's data, was 98,000 contracts. So every dollar move there represents over $500 million of equity loss. That's a big strain on the exchanges in trying to collect margin calls, and a big strain, obviously, on the speculators that are short in that market. So it makes things a bit dicey, and it added to the bullishness as this large short position was really straining to try to get out. Now we have a situation today where wheat is trading once again, and I should mention that as we speak, Chicago and Kansas City and Minneapolis wheat prices are all limit down. For Chicago and Kansas City, that's an 85-cent drop. For Minneapolis, that's a 60-cent drop. May corn is down 20 cents at the moment, and May soybeans are down 18 cents at the moment. Much of the losses in corn and wheat were already taking place before this report came out. So this continues to be a very volatile, dangerous market, very tuned in to the concerns about what's going to happen in Ukraine, and honestly is not going to pay a lot of attention to today's new USDA estimates. But we keep track of them here, of course, and but we also want to help you understand what the market is actually doing. In sum, today's report, I would say, was roughly neutral for corn and soybeans. In the case of corn, ending stocks were reduced as expected, not quite as much, or actually reduced a little more than expected. World ending stocks came in a little higher than expected, but USDA did reduce, world ending stocks did come in a little higher than expected, and no changes were made to Brazil's crop estimate, with the second corn crop just being planted now. In the case of soybeans, U.S. ending stocks were lower, but they were also a little higher than analysts were expecting. South American crop estimates were lowered and are closer to private estimates, but still might be a little too high. Again, CONAB from Brazil will have its own estimate here early Thursday, and we'll see what they say on their end. And then lastly, I'd say the wheat changes from today's report were slightly bearish. U.S. ending wheat stocks was a little higher than expected, and we did see that higher crop estimate from Australia add to the world ending stocks total. These were not big changes. I could have also called that neutral also, but both of them were slightly bearish on the day. Okay, Andy. Well, that's been a lot for today, but if you have any questions, I'll be glad to take them at this time.
Well, Todd, I think you're off the hook a bit on this one. I do want to apologize for those who are listening to this after the fact, who had trouble logging in. We did have some technical difficulties with our session today. So again, sincere apologies. And Todd, for that reason, we really don't have many questions, or actually we don't have any questions. So you're, like I said, you're off the hook.
Okay.
The good news is that for those, again, who are watching this after, please reach out to Todd at the contact information on the screen, or certainly visit us at dtmpf.com for more information related to WASDE. Yeah, I think I'll just conclude the event with that in mind and say thanks to all for your continued patronage to us. So thank you.
Thanks, everybody.